Hey, this is Sasha Evdokov. It is March 3rd, 2016. Welcome to episode number 74 of Let's Talk Stocks. In this week's episode, what I'd like to do is share with you some insight about economic indicators and, more importantly, the jobs report or the labor report. It just so happens we haven't talked too much about the jobs report or a lot of economic indicators, sentiments that come into the markets. So what I'm going to do is give you some insight about this economic indicator, about the jobs report, and really, does it really matter? Does it really not matter if you're trading in the market? I'll give you some insight about this jobs report. In general, what most people look for when they're looking at this jobs report is they're looking for how the economy is performing. It's an indication of really how many jobs are created, how many jobs are lost, and it gives you to see how the fundamental market is really behaving. Now, in terms of relative size or relative scope to your personal positions, do you really care about the jobs report? Do you really care in terms of trading and your investments? Does it really matter if the job gain or growth is 200,000, 300,000? Does it really matter? No, absolutely not. It doesn't matter. What you care about when you're looking at your trading, at your position, you're looking at what's your risk, how's the market moving, how's the market reacting, what is it doing, and how does it perceive that jobs report? That means, what does it mean for everybody else's trading as this job report comes out? Now, if you're a retail trader, I'm assuming you're listening to this, you're probably not a hedge fund. But if you're a hedge fund, you're the type of person that can manage and move around the market. But being a retail trader, what you're doing with these job reports is you're watching to see when these things happen, when these economic indicators come out, and then you're tweaking and adjusting your position based on how the market reacts to them. So really, it doesn't matter if the job growth is great or if the job growth really just stinks and is horrible. All that you care about is how's the market behaving and how does that affect your position, your profit and loss, your stops, your risk within the market. For everybody else, in terms of if they're running a hedge fund, yeah, for them it's a little bit of a bigger deal because they might be looking at a longer term scope and they need to really manage and adjust their positions. How do they do it? Well, don't stress about that too much because it's kind of like if you go into a marathon race or swimming, you don't care about how fast the guy next to you really swims. If you got, let's say, 10,000 runners like in the Boston Marathon or some marathon race, you care about your pace, your water, your liquid. How is your bike running in the Tour de France? How are you running if you're running a marathon in the Boston Marathon? You don't worry about the guy next to you as long as he doesn't get in your way. You're trying to run your race and do it the best that you can do. That's your goal. That's your focus. So the same thing here. You're not really worried about what the other guys are doing. Instead, you need to look at your positions and how that's going to affect your positions when this economic indicator comes out. So you need to plan and prepare for this because, it could give some room to the upside or it could give room to the downside. So does that mean a great jobs number is actually going to give you high results or give you a great movement to the upside? Absolutely not. Does that mean a bad jobs number is going to pull the market down? Absolutely not. There's a video I've done actually on my Backstage Income YouTube channel that I started not too long ago, where I talk about book reviews and why some books actually get really bad reviews. And it's really for some of the most basic things. In fact, a lot of my books have had some bad reviews as well. And, people will review things in a very negative way because of their perception, maybe because they don't know how to open up the ebook file. It could be simply the chart isn't big enough and all of a sudden they mark it down quite a bit. It is because what they expected is not what they got. So even though so when it comes to a jobs report, if you're expecting an average number and you get a much better number, then it's a surprise and it could push stocks to the upside. But if you're expecting a high jobs growth, and even though you got, let's say, a medium jobs growth, all of a sudden that's not as good as your expectation or your perceived value. So now that could pull the stock lower. So that's why I always say there's always a couple of headlines that you may see in the news that sometimes they'll say, well, this week, stock market higher because gold is higher. The next week, you might see stock market lower, but gold is higher. So then they really aren't one-to-one related. So it's important that you don't stress too much about these job numbers and job reports. All you're looking at is your personal account, how it's moving, how it's behaving, and how the market is setting up for it. Now, if we look at the market right now, currently, it's pressing against this 2000 level on the S&P. 2005 is really where we want to watch. 2005, that's kind of the level you need to be watching. There could be some resistance here that could be coming up right now, and it could be dangerous for the market. So you need to pay close attention to that level, because we're getting a little extended here at this level. But if this breaks, I mean, we've had, this market has wanted to go higher. I mean, we bounced right here since that release of potential oil production cut. We've been wanting to go higher ever since. And now we're almost a little bit overextended here. But if we break above this level, we could go potentially much higher. And we could get back into this trading range. If we look on the weekly, if we get back above that 2000 level, we'll go back right here again, and this market will just continue to move sideways again, more than likely, because if it goes up too high too fast, I mean, markets don't crash to the upside. They simply, typically move slow to the upside. Unless you had a nice pullback, then you might get a solid pop to that upside. And that's what we had the last couple days. One of the reasons for that, and I actually talked about it in one of the videos here that I wanted to pull up, is what is window dressing. So if you want to go to this video, it's published December 22nd, or you can just search for it. This really talks about window dressing in the market. Window dressing happens at the end of the month, and then new money comes in at the beginning of the month. So kind of like with this jobs report, there's new things that happen every month. And these hedge fund managers, what they do is they typically get rid of their positions at the end of the month. So look at what happens here at the end of the month, and I'll just use this last month as an example here. Monday, February 29th here on the leap day, you can see stocks sold off, and that is because they had a position rotation. So why did they sell off? And we sold off on fairly good volume, and if you were looking at this, you would say, well, it's kind of bearish, but if you know and understand that it's the end of the month, you realize that there's position rotation that happens. So we had slightly higher volume, even though it was a little bit bearish. It was really for position rotation. So you can see February 29th, 2016, right here, we sold off. And then the next day, March 1st, we had buying stepping in, okay? Because people were preparing, these hedge funds were preparing for that new month because they had a really crummy February and probably a bad January as well. We had a lot of selling, a lot of bad trading that happened. So they were ready and anxious to buy because all the other people, like your mom and pop, your friend next door, your guy that you go fishing with, the guy that you play music with or chat or whatever, you go out to dinner with, you hang out in the garage, whatever. All those people, when they get the reports at the end of the year, they got to show those people something. What is it that they have on their sheet? What is on their portfolio? How much are they making? Every month, they got to send them something. Otherwise, what did they do? They just twiddled their thumbs all day, So in this case, that's what happened, is that we got buying stepping in right there on that first on Tuesday. Now, did this happen on the previous month? Well, it doesn't always happen like this. It just depends. But let's take a quick look at what happened here on the other months. So if we look at here on Thursday, we got January 28th. We had a light little pullback. or basically an average move. On the 29th, we had a major pop. And then on the 1st, we had kind of a consolidation, you could say rebalancing. So on this month, we didn't really have that happen. So the portfolios didn't really do a lot there because they were probably still nervous about the downtrend there in January. But really, on Friday, January 29th, what did they do? There was another major move in the markets right before we got into February. Why is that? Again, window dressing. They had to change the position. So you'll typically notice something on the 29th or the last 1 or 2 days of the month, and then the first 1 or 2 days of the month. You'll see something happening, a little more volatility. And that is because, look, they had to buy something to show something on the form, on the paperwork. If we look on January here with with Christmas and with New Year, sometimes these things don't work out as well. But here's what happens. Okay, we had a couple of selling areas and actions, and then people came in, and then we had a large day on the 1st, or the first trading day, the 4th really, of selling. So we had selling starting to pick up. They said, okay, I'm getting out. I need to rotate positions, or the market's kind of acting weak. And then we continued the selling. So they continued that. And you can continue, picking any month really on the 1st or the first couple of days of the month. Here we had on November 30th, December 1st. Look at the little pop we had here on December 1st compared to November 30th. Notice the pop. Then we had another one on December 2nd and then the 3rd. So the first 3 days, 4 days really right there of trading, boom, a change of position. So you can do your own studies on those and take a look at them. So in either case, looking at the jobs reports and things like that, that also happens, and it helps fuel things in one direction or another. For me, I don't worry too much about it. I look at how stressed the market is, or how much movement fuels the market based on this jobs report, and then how does it affect my position. So if, for example, let's just say for conversation's sake, we'll talk about Amazon here. If I'm in Amazon, and let's say I got in it after it cleared this moving average or after it cleared this, all I'm worried about is I don't care if the market sells off. For me, I care about my position right here in Amazon. What's Amazon doing relative to the market? That's what I worry about. And I don't worry about the rest of the market. That's not my concern. My concern is my position, my stop. Where is my stop? If my stop is 558 and it brings it down, that jobs report brings it down, and my stop's at 558, that's where I get out. Otherwise, you stay calm. You let things roll. You let things continue doing their thing, and don't worry about the number. Don't worry. Why would you worry about the guy running next to you unless you need to be ahead of him to finish the race, if that is your goal and plan? Otherwise, you really focus on your own. You focus on your breathing. You focus on your own weights. You focus on your own pace. That's what you're focused on, right? You're not worried about how much fuel as you're driving, how much fuel the car next to you has. That's probably the last thing on your mind. Who cares? That's not what your concern is. You are worried, though, if there's a big tire in front of you coming into your lane and you're driving 50 miles an hour, then you are worried about that. Then that's a concern. You have to make an adjustment. But here, if you're cruising, you're not worried about the car next to you. You're not worried about the indices, the jobs report, because your position is in a whole different lane. So that's what I want to get across to you, is that these economic reports can shift the market, they can move them, but you need to focus on your own position and don't stress about what the actual number is, because in the end, that's really not relevant, okay? Focus on your position. Unless you're a hedge fund manager, then it's a whole different game, a whole different story. But in this situation and case, look at your position, how things are moving, how they're behaving, and how it affects your position. Because that first month or two, or the first couple days of the month, the last day of the month, they're all window dressing. And the same thing here, this now creates a little adjustment point into the trading. So they'll make some adjustments to their positions based on that outlook. Okay, so based on how they were positioned earlier. So in either case, let's take a look at some stocks this week, just because we haven't done that in a little while. So I want to share with you some of the stocks I've been posting in the critical charts. Obviously, if you're looking at some of these stock charts now and you don't have access to the critical charts, you might have missed some of the moves here that we're talking about, but it'll give you some training and insight and ideas about just looking at some charts, learning from the charts, and give you some insight. So let's just start with Amazon right here. We talked about this one in the critical charts, about this resistance line, and you can see that we were waiting, pushing, and then we broke past this resistance line. And then if you would have gotten in it right here, you would have had about a 10, 11 point upside swing on this stock. So that was a nice win there for the members. Some of you guys wrote into me on this one because one of the other reasons is you're looking at this A to B, B to C, C to D pattern. Once that's completed, something new happens, right? So we could be building an ABC, C to D, and C to D pattern again now to the upside. Who knows? But time will tell. But that was our support and resistance line right here, and we broke above it. We were building for it for about a week, about 8 days, and we broke past it, and stock looks good for now. And we'll see if it comes into this resistance right around 610 level right there, 605, 600 level. There's some resistance there. Not to mention here we have this gap right there. If you draw that across, notice that gap over there, which has already been filled, but it is an empty space. So you do want to still pay attention to it. If you look at Tesla, I talked about this one. I wasn't sure which way this would go. There's a couple variations to this. This is a very solid support line right here. So I did look at this. I said this could be a potential ABCD pattern, where we are moving this ABCD pattern right here, A to B, B to C. It could go to C to D, but since the market sold off quite heavily, the other option I said that could happen is that back to that support level that we had over here, that this stock could pull back to that support and bounce, and that's actually what we were doing. We're not doing it on heavy volume, but more volume can come in. So right now it looks good for higher prices. I would use 178. Give it a few extra dollars as your stop. If you didn't take off half yet, make sure you take off half or a third just for safety and let the rest ride. Caterpillar's been acting well as well. Here's the swing point right there. Boom, breaking that 70 mark. I got in this one 67 or so. That was my entry point right around there, 68. Saw the volume coming in right here on this volume day, volume spike. Didn't break it, wasn't ready, and then it continued to power higher, so looks good for higher prices. If you look good on the weekly here, I mean, this one, if you look on the longer term, A to B, B to C, C to D pattern. If you look on the monthly, I mean, getting in at this level, you could say, well, it's kind of a value play in a way. And here's kind of our support lines coming in on the monthly. You can see there's some serious areas over in 2007, 2008, 2010 that we're hitting, and currently right now. So there's a lot of value, probably buyers coming in and stepping in. When I talked about this one for a little while, we were moving sideways. Definitely was posted in the charts in the members section multiple times. This was the area we were watching for clearing of that. Cleared it, hung around right there, and then exploded. So if you got in on this one in win after that clearing, you would have been up $12 in about 2 weeks. Pretty good, and continues to power higher. This one had a lot of ABCD patterns. This is a great one to study to the downside, even if you are not trading this stock. Simply, let's just take a look at the 2-day. You can see here, if you really look at this pattern, you can see there's a lot of ABCD patterns. A to B, B to C, C to D, A to B, B to C, C to D, A to B, B to C, C to D, A to B, A to B, B to C, C to D. So there's a lot of them that happen, and then we move sideways. This is 8 to 12 weeks, 8 to 10 weeks consolidation, and that kind of evened things out. You can see the moving average starting to clear on the weekly, and we're starting to take off. So this one might be moving a little bit higher. If we're looking for an upside move, how far can this stock move? Well, when we're looking at it, if I take it out to, let's say, the monthly, again, the reason why I looked for that pullback, A to B, B to C, C to D. So the stock was overextended, so once it hits the D point, we know something new is going to happen. So the pullback, if we really look at it, it's probably right around the 68% line. We talked about the Fibonacci sequence in the past, where just a couple of recaps ago. So you can see, look how interesting this is when it comes into it. So you can see right here, as we go a 1 to 2 retracement over here, or as we go from these swing lows over here at the $16 range all the way up, we clear the 61%, okay, right here, but it hits these swing points over here at this head and shoulders pattern. This is the monthly. We don't get a full 1-to-1 retracement, but we do come down into this 50 level, and now we're starting to bounce. So how high can it go? So what you do, based on the Fibonacci sequences, you take it from the swing highs, go to the swing lows. So we could do a nice retracement to about the 150, and look at how that puts the 50% right here at that resistance point. So we can get there and everything could be natural. So we'll see. So that's just something to watch for and to look for. If you look on the weekly, you can see it more clearly. There's that support resistance line, 50%. You can see how it hits it just about right on. So it's very interesting and fascinating how that works. So that's Wynn. Let's take a look at another one. We got Monsanto coming into this support line right there. Again, you could say ABCD pattern, maybe right there. If it breaks this, then that C to D pattern could continue. So just watch it. If you look at Apple, here was our support line right there coming into that, starting to attempt to bounce there. Not on heavy volume or anything like that, but it is a rounded bottom. So when you watch that rounded bottom, and here's the resistance level, it started to break, and then now it's continuing higher the next couple of days. So it looks good. Netflix, if we look at it here, Netflix is building this little tight consolidation pattern, so just kind of watch this to see if it'll continue moving in this area or break lower. If it breaks that support line, that could be trouble or a way to exit. Facebook's in a similar digestion pattern right there. It's really, the volatility has dropped. It's just really a calming now market relative to where it was just a month ago. If we look at Home Depot coming into the highs right up here at the 126 level, building some energy, so watch to see if it breaks. We also have Nielsen that we put in the critical charts there. And you can see this one here already took off. We had this one in there, and today, again, a nice follow-through day. So that one looks good. Yeah, let's look at Disney. Also here we had a double top at the highs. We had a bounce here at the double bottom on the bottoms for the support. Stocks bouncing here. This would be your area of support that you want to watch. This could kind of be the area at the 90 level where you want to watch that stock. How high can it go? We take a look at the Fibonacci sequence from the highs to the lows. Can get to right around the 50%. 50%, notice where it's coming into. It's at that gap level right there. There's that little gap. And it also comes into almost that support and resistance level right around September, October area. So you can see, and if you take it out to about 2014 or January timeframe of 2015, where are we at here? That is April of 2015. See, that's also the support region or area. So this whole thing at the 50% could be one level to really watch that could show some resistance in that stock. So those are kind of the stocks that you're watching, stocks that you're looking at, popular companies. I've seen some people write to me and say, hey, wonderful course material, wonderful lessons lately. And I'm glad you find them helpful. So, that's kind of my goal, just to spend a little bit of time to help out the regular person, to give you some insight, to give you some ideas to play with. Because if you're looking for a secret sauce, if you're looking for a secret recipe, there's no real specific magic to this. It's all about learning the business and learning about how things move, act, behave, how to manage the business. And you know that there's probably a lot of different businesses out there in the world, and you might have a barber that's really successful, and the guy across the street who's also a barber is not very successful. And it's not the fact that you can't make money as a hairdresser or a barber. It's the fact that the guy across the street that isn't making money just hasn't figured it out yet. And that's okay. You'll experiment with things, you'll try things, and eventually you'll get it. Eventually you'll put the pieces together. So start slow, build things, and really focus on your own trading, on your own craft. My goal is not to really just give you and feed you information and alerts and ideas in terms of what to do exactly step by step and handhold you, because I can't do that forever. I'm not going to live forever. And, the same thing with you is that if you weren't handhold forever, I mean, you've now grown up and you're not holding your parents' hand every single day. Initially, you were, and you were in their arms, you were in their hands, they were taking care of you. But now you need to step it up. You need to, walk the walk. You need to do it on your own. And my goal is not to handhold you anymore. My goal is to give you variations, give you insight, to maybe think a little bit differently, to maybe see things in a different perspective, so that way you can make a decision to what you need to do for your trading. Whether that is to kind of use some of the strategies that I'm mentioning and implement it in your own trading, or go the other way and completely actually ignore what I say and do it backwards. So there's nothing wrong with that if you can use some of the concepts in your own way as an advantage to benefit yourself. In the reverse, hence why some people are contrarians. They trade to the short side, others trade to the long side. There's nothing wrong with that if you can justify it, if it makes you think. So for me, my goal is to really get you to think, to get you awareness in the tools, the strategies, the variations, why you may want to look at some things and why you maybe don't want to look at some things. Who cares about looking at some other things, right? So you need to get outside the box and start walking on your own. And that's really my goal. So I know there's a lot of chart services out there for alerts. There's a lot of things that tell you what to buy, when to buy, how to buy it. But eventually you gotta do your own homework. You gotta do your own work. And that's really where the hard part comes in, is that, anybody can feed you things, but if you don't put the time in, once that item is gone, then you have no strategy, no system, no rules, nothing in place, no business structure, and you got nothing. So learn. The secret to this is to constantly learn, to try new things, see what works, see what doesn't, what's making you money, what isn't, what kind of market conditions are favorable to you, and what kind of things are not favorable to you. For example, to have a picnic outside, it's favorable to do that on a sunny day. Now, on the other hand, to have a fireplace and, enjoy the warmth, it's probably favorable to do that inside on a cold day. On the other hand, you probably wouldn't create a fire in your fireplace on a hot summer day. It's probably not normal. It's not the right conditions. And the same thing, you wouldn't go and have a picnic in the snow, or you wouldn't go and have a picnic in the rain. So look at the conditions. Look at the conditions of the market. When is these certain trades favorable, and when are certain trades not favorable? So start building up your repertoire of your trades, your trading, and what works for you and what doesn't. It takes time, discipline, and if I help you get there, make you think a little differently, then by all means, use it. As far as for me, I'm still working on the options course. I have about 24, 25 hours filmed now. Constantly keep working on it. It's taking time. It's a large course, and that's really my focus. That's going to be my big course of the year. And, as far as estimated of when it will get done, I really don't know at this point. Probably take another 2 months, I would say, just because manufacturing itself takes a month. But it is my priority, and that is basically the only thing I'm working on as far as courses go. besides keeping up with the critical charts and some basic videos that we release. So that is it. I'm just working on the options course, and it is massive. And looking at what I have done and what I'm working on, it's going to be about a 60, 70 hour course. So that's about 70, 80 DVDs, and it's huge. And that is just simply because I don't know how other people can trade or teach options in 1 or 2 DVDs. Maybe they know some secret recipe that I don't know about. But for me, I'm putting it together for detailed learning, for the motivated people, for the people that want to learn. So I'll keep you updated on that. But I'm working on that quite hard and trying to get that done with time, as well as focusing on my personal trades and investments. So, all right. Well, hopefully you had a great week so far. Trading has been a little bit light. Remember, they're setting up right now. Stocks aren't moving as much just because they're waiting for the economic indicators for the jobs report, and then you'll see things either pop higher tomorrow, pop lower. We'll see what happens, and just watch how your positions react. Are they reacting favorably, or are they kind of pulling back? Are they strong, or are they weak? And you'll get to see that. Which stocks are moving strongly, which stocks are moving weakly on these reports. So enjoy the week, the rest of the week. Hope you have a great weekend. We'll be going to a comedy show here this weekend and enjoying the comedy shows, and just get a few laughs in and make a few memories. So have a great weekend. Enjoy, and I will see you next week.